Hi, I'm here today with Heather Staples Lavoie, who is the CIO and head of enterprise buying at Horizon Blue Cross Blue Shield. Heather, thanks for coming on the show.
No, thanks for having me.
I'm really excited to have this conversation today because two things. You wear two hats at Horizon Blue Cross Blue Shield. One is IT buying and also enterprise business line solution buying, which is very unique. And Horizon Blue Cross Blue Shield is a top 25 healthcare insurer. So you're really speaking from a large enterprise perspective. The other thing that's really exciting is that Horizon is an investor in MVP Capital and has been for a number of years. And you've been a great partner and part of our corporate network. So we're really excited to get into it with you today. I'm going to jump right in, and I'd love to hear a little bit more about your dual roles and how you engage with startups in those roles.
Sure. So I have accountability for all of operations, so which would be claim, call, enrollment, billing, and then on the technology side, for technology spend, as well as our internal technology development, and then the EPMO. And so startups come to us in a number of ways. Sometimes they're coming in sort of through the straight technology focus. Oftentimes, though, they're coming in with a business partner, whether it's sort of within my sphere of accountability or business partners with the contracting team, the clinical team, legal, like some other part of the organization that they might find. They might have a specific use case that they're coming in and introducing themselves in that way.
Got it. Very cool. Maybe talk us through how you think about buying versus building software and how those buy versus build decisions work.
Sure. So, with any corporate initiative, there's a business case that gets developed, sort of a specific set of enabling capabilities. And we really then take a look at the market. Oftentimes, we'll leverage like a Gartner to do a market scan. We might even leverage our strategic initiatives group to do a market scan to make a determination as to whether there's off the shelf software that's available. And then we compare it to kind of an internal estimate of what it might take for us to build. Usually, we're assessing the uniqueness of the capabilities. Is this something that should be a product that we want to license? And because again, there's sort of a roadmap that you would want to make sure that you're being able to avail yourself of. And sometimes it doesn't make sense for us, if really, depending upon the level of specificity, it doesn't make sense for us to build it on our own. Either we don't have the skill set, we may not have the domain expertise. This is something that we feel like may need to have sort of a long cycle of iteration that we think is best served by a product. So each project is evaluated on a build versus buy perspective. Oftentimes, if it's our business partners bringing those solutions to us, oftentimes it's a product, a vendor that's come in and they're starting in that regard. And then we evaluate that too. And we have to assess the security. Sort of, we do a thorough then assessment of any third party software before we make a final decision.
What's an example of something you've decided to build internally recently?
A good example is one where we have, in collaboration with our pharmacy team, we have medication therapy management. Over years and years, we've looked out at the market, and there really hasn't been something that has been suitable from the perspective of our chief pharmacy officer. She really felt like her needs wouldn't be best served by any third-party software. Each time we've evaluated, we've done previous builds of the software internally, and each time we've sort of gone to iterate it, we've done another market scan. Still not, the capabilities aren't in keeping with what she needs, and we would actually go backwards were we to license something on a third-party basis. And so that's one where we just did a recent release of the software, and it allows us to, I think, better customize according to the needs of the pharmacy officer and the pharmacy team.
That's really interesting. It kind of brings up a second question, which is because you're overseeing IT and also business solutions, is it more likely you're going to build your own business solutions because they're more bespoke, or is it sort of equal build versus buy between those two areas?
I would say it's a bit equal build versus buy. I think some of what we've seen of late, though, is we've had, and it's not something maybe I would have expected stepping into the role, but when we take a look at our portfolio over the prior year, we've actually had better success from an on time, on budget perspective than when we've built it as compared to when we've licensed. We've actually hit a number of roadblocks from a licensing third-party software perspective, and whether it's the capabilities weren't sort of as described in the sale process, when it came down to implementing. Maybe they didn't have all of the maybe logging and monitoring capabilities that we needed, or maybe as it relates to AI, it wasn't necessarily as mature as we had expected, and it required a lot more of us from a training perspective to sort of train the AI to do what we had expected. And so the performance of it was much less than had been anticipated.
And you mentioned AI, and that was another big question that I had for you, which is in the times we're living, pervasiveness of LLMs in the enterprise, does that change the buy versus build decision for you? Are you more comfortable working with a large foundational model provider and then building your own stack on top of it? Or how has it changed the buy versus build discussion?
It's one that we grapple with because it's sort of not clear cut. We sort of expect that there's going to be solutions out in the market and the models are sort of very well trained. And I think our experience, it has been across the board. What we're finding is there's a lot of niche solutions. And I'll give maybe a good example of call wrap up, right? So our customer service agents, real strong value proposition in terms of having AI that can handle all of the call wrap up, sort of synthesize the call, finish it, saves a lot of post call time. It allows the agent to be more engaged in the conversation that they're having with the member or the service agent with the provider. We need those same capabilities with our clinical team. And what we're finding is there's niche solution coming to market for one or the other. But if we build it in-house, we can actually serve multiple use cases and not be as constrained as maybe some of the licensed products in the market. We also have, because we're a blue plan, sort of use of our data to train outside models. We're precluded from doing that. And so we need models that are 95% if we're going to license them, as compared to if we're building something internally for our own use, then we can actually use our own data. But we really need to make sure we have a walled garden of our data. And so we can do the last mile of training an outside model. But if we can't be sending our data outside to build and train new AI models, we're going to need to do that in-house.
I remember our last conversation, you were talking about that specific issue for the healthcare industry and for payers specifically. Are there other challenges selling into payers, maybe healthcare writ large, that startups run into that they wouldn't run into in other enterprises?
I would say one of the biggest leaps for a startup is actually related to cybersecurity. It's there. We set a very high bar, as we need to. Obviously, we're a specific target from a cyber perspective. Our expectations in terms of really having very hardened systems are high. We do a very thorough vetting. We can't take any chances. And that's difficult for a startup to make the kind of investment. I think we're seeing many startups understand if they're going to work with healthcare, they really need to be thinking about high trust. They really need to make sure that they have SOC 2, but it's early. You can't get a SOC 2 if you don't have customers. And so it's really difficult from a beta pilot perspective for startups to get inside and to work with real data and to have sort of that real use cases. So it's a big leap. And I would say that there's a greater reluctance on our part to participate in those. We'd rather wait to see things proven out than necessarily pilot at an early stage of an organization.
That makes a lot of sense. And if you were talking to a founder, what advice would you give a founder of a seed stage or Series A stage company about selling to Horizon specifically?
Sure. It's sometimes, having been on the other side of in startups, having a strategic involved. And so there's maybe a greater likelihood, if you have a strategic investor involved that's a health plan, that they maybe have a greater willingness to participate. And certainly start with a security in mind from a cyber perspective and thinking about high trust. It's going to make that much easier when it comes time to licensing, because you're going to have to overcome that threshold. People aren't willing to take any chances, particularly. And another is, as you're thinking about putting together partners for any solution as a startup, you need to be thinking about any third party and any fourth parties and what obligations you have to monitor the cyber position relative to any downstream vendors that you may have as well. That really we're seeing sort of much greater threat from third and fourth parties than ever before. And that's something that they might not have considered, is just how much obligation they have to provide oversight to any of their partners.
And that sensitivity to cyber risk, has that increased in your time at Horizon in the last few years?
Yeah, I think I was a few weeks on the job when we had CrowdStrike. So yes, I definitely was top of mind from the get-go, but we have certainly seen a lot of creativity on the part of threat actors to try to break into systems. And so it's constantly top of mind. And again, we're going further downstream and taking a look at third and fourth party, monitoring them on our own. Even if third party isn't looking at fourth party, we're looking at fourth party vendors and constantly monitoring them as well to make sure that we're protecting ourselves.
That makes a lot of sense. One other question I had about the founder selling journey is it better for them from a buyer persona perspective to target people who are like business line decision makers, or should founders try and go in through a centralized IT group or maybe an innovation group? Where do you see folks have the most success?
I think they have the most success when they're able to demonstrate business value. And so selling into the business teams is critically important. Oftentimes, I've lived the life on the business side and the technology side. And oftentimes, if things are technology led or technology for technology sake, and you're trying to prove that value to the business, those are often the ones that fail. You may have a license agreement and then it goes nowhere once it gets inside the company. And so really having either a strong partnership between technology and business operations or working with the buyers in the business is going to be most critical. And then you can overcome any hurdles with respect to IT afterwards, but having that strong business partnership. We don't do anything sort of technology for technology's sake in the organization. There has to be a clear ROI and a strong business case to make sure that there's any corporate allocation assigned to the project.
Well, that's really important for founders to think about because there's a lot of ways that you start with good traction and end with nothing selling into large enterprises.
And oftentimes you see a lot of solutions that there may be the primary sale, say to the health plan, but they really actually have to sign on members. And that's oftentimes a pretty substantial hurdle in terms of actually getting access to the members, marketing to those members, getting them signed on. And I see a number of startups that have been challenged as well, which is, wait, great, I landed this great deal. I've got a new logo. And yet you've got very small penetration and within the health plan afterwards. And it's a tough slog. And so thinking about that in advance is really critically important because it's hard to get the health plan to then do all of the work on your behalf. You really have to think about how are you going to, if in fact it requires sort of a secondary sell to members to get them engaged, sort of what that looks like.
That's super helpful. And Heather, it's been great to talk to you today. These are great pieces of information for founders to take away. And you have such a unique position at Horizon. Thanks so much for joining me.
Thank you so much. Great to be with you.